What's up, everybody? This is Antonio here bringing you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 a week. So in these episodes, I do pull up the companies you guys do provide me. So in this episode, we will be going over VYM. So we'll pull it up on Seeking Alpha, look at the chart, and then we'll pull up the company profile or ETF and look at what they do, and then we'll jump and look at the charts, look at the performance in the past 1 year, 5 years, 10 years or so, and then we'll pull up the dividend scorecard, and then we'll look at the summary for the dividends, pull up the calculator, crunch the numbers to see how much we would have to own of this stock or ETF to make $1,000 a month, $100 a month, and also $100 a week. And then we will wrap it up, guys, with looking at the dividend yield, showing us when the perfect, if it currently is, or in the past, entering the best dividend yield time. So we will be going over VYM. So if there's a company I have not covered in the past, guys, let me know. I'll be happy to add it to the list and we'll eventually get to it. But I'm going to go ahead and pull up. So VYM, Vanguard High Dividend Yield Index Fund ETF shares, currently trading about $100.92. If we pull up the fund profile, we can read a little bit about them. So Vanguard Whitehall Funds, Vanguard High Dividend Yield ETF is an exchange traded fund launched and managed by the Vanguard Group Inc. It invests in public equity markets of the United States. The fund invests in stocks of companies operating across diversified sectors. The fund invests in growth and value stocks of companies across diversified market capitalization. The fund invests in dividend paying stocks of companies. The fund seeks to track the performance of the FTSE High Dividend Yield Index by using full replication techniques. Vanguard Whitehall Funds, Vanguard High Dividend Yield ETF was formed on November 10th, 2006, and that's really about it here. If we look at the fund type, it is a U.S. equity. Issuer is Vanguard, and again they were actually founded by in November 10th 2006, or that's when it was formed. The expense ratio is a 0.06%, and then assets under management is at 46.01 billion. If we pull up and look at the performance back at the year to date, they are actually down by 6.57%. On the 1 year, they are down about 5.49%, and then on the 5 year, they are down, or they're up in the green by 20.30%. And then on the 10 year, they are up 63.46%. And then on the total year, they are up 99.94%. I don't believe that this includes dividends reinvestment. I'm not 100% sure on that. But on the 52-week range, guys, 52-week low is $98.40. 52-week high has been $113.78. So they're trading closer to the 52-week low. Expense ratio again is a 0.06%. They do pay out quarterly. Dividend rate is $3.35. The yield is at 3.32%. And again, assets under management is a 46.01 billion. So pretty large fund here. And then if we look at the dividend scorecard, guys, we can look at the dividend summary. So dividend yield is a 3.32%, pretty decent there. Annual payout is a $3.35 is what you get paid annually. Nothing for expense ratio, payout ratio, and then 5-year CAGR is a 5.60%. Dividend growth showing 12 years, and then they do pay out quarterly, which you would get about 78 cents every single quarter. Let's go ahead and pull up the calculator, and we can figure out some numbers here, crunch the numbers. So first one we want to figure out, guys, is how much of this ETF would you have to own to make $1,000 a month. So we want to make $1,000 a month. There is 12 months in a year, so annually we need to make $12,000. You would take those $12,000 divided by the annual payout, which is at $3.35, and that would actually give you the total number of shares that you would need to own. So 3,582 shares, and then if you multiply that times the current share price, which is $100.92, that would give you the total amount of money you'd have to invest at this current share price, which is $361,504, and you'd be roughly making about $1,000 a month. So pretty cool there. Quick way to calculate this is take the $12,000 you make annually divided by the dividend yield here, which is that 3.32%. And you'll see we get roughly about $361,445. That's kind of a quick way to calculate that. The other one that we do is how much of this company or ETF would you have to own to make $100 a month. This one's a little bit more achievable. You could actually take the previous answer divided by 10, and that would give it to you. But since we do have the calculator and maybe people want to know the math behind it, we'll just go ahead and walk through it. So $100 we want to make every single month, 12 months in a year. So annually we need to make $1,200, and then you'll see if we take the annual payout by $3.35, if we divide that, you'll see that we get roughly about 358 shares is what you'd have to own, and you'd be roughly making about $100 a month. Then if you multiply that times $100.92, which is the current share price, you'd have to own about $36,150, and then you'd be roughly making those $100. Again, quick way to calculate this is take the 1,200 you need to make divided by the dividend yield, and you'll see we roughly get about $36,144, and you'd be roughly making that $100 a month. Let's go ahead and do the last one, guys, which is $100 every single week. This one's actually pretty nice. Imagine getting $100 every single week. But you'll see that we want to make $100 every single week. You multiply that times 52 weeks, because there's 52 weeks in a year. So that means that we need to make $5,200. If you take that divided by the annual payout, which is $3.35, you'll see that we have to actually own about 1,552 shares. Then all you have to do is multiply it times the current share price, which is that $100.92, and you'll see we have to have about or invest about $156,651 at the current share price, and you'd be roughly making about $100 a week. Of course, they pay out quarterly, but you would divide it by I guess 4 or so, and distribute it out evenly, or I guess not 4, but 12 or so, but you divide it evenly out, and then you'd be getting about a certain amount per week, which would come out to be those $100. And then a quick way to calculate this is take the 5,200 divided by the dividend yield, which is that 3.32%, and you'll see that we get about $156,626, which is a quick way to calculate this. And again, you don't really require a lot of this capital up front if you have time on your side, as long as you're dollar cost averaging, reinvesting the dividends. It does require a lot less capital up front, but it does require time. But let's go ahead and wrap up this video, guys, by looking at the dividend yield. If we look here, you'll see that this is the dividend yield that will fluctuate over time. It's showing the past 5 years, and it goes all the way to about 2018. So you would see that it kind of fluctuates about on 3%, 2%, and then back in the March 2020 crash, it actually spiked up all the way to about almost 5% dividend yield. That would have been a perfect time to enter, but there was a lot of fear back then. You'll see in 2021, 2%, almost closer to 3%. And now it's staying around the 3%, so it's kind of like historically staying around the 3%, so potentially a good entry. Maybe wait a little bit, we don't know, but let me know in the comment section if you guys are invested in this ETF, and then are you planning to hold it for the long term? What are your goals here? And don't forget to subscribe with that notification. Don't forget to drop a big thumbs up on the video, helps out the channel a lot. Definitely appreciate it. Let me know any other companies you guys want me to add to the list. I'll be happy to do so. I will talk to you guys later. Take care, stay safe out there. Bye, guys.